Hello, everyone, and welcome back to the channel. This is Fair Value Finder, and today we're taking a look at Foot Locker because they had earnings yesterday and things were not pretty at all. The stock was down over 20%. We took a look at the stock about a month ago, and it seems to be one that you guys are all interested in. So it's definitely worth taking a look at again, especially after these earnings. In that last video, I said that it was a very risky stock. It may be undervalued, but things were not looking too good on the whole financial and balance sheet, and really across the board, things weren't looking too hot. So this is what we were looking at last time in the last video, which you will be able to find right here. We said that they had a fair value at the end of last year of 31.81, and if they were able to come on expectations this year, we'd be looking at around 56 and a quarter. But they are down so much because they cut their dividend and they lowered their guidance. So we're just going to read through this earnings report. I have everything important highlighted because there's so much to talk about that I couldn't just get it all by copying out information into the spreadsheet like we sometimes do. So all of this is the summary, but we'll get down to it later on, and we'll start with what the CEO had to say. So they said that it's still tough with the consumer and that they saw softening trends starting in July. So they're continuing to make progress on their inventory levels, hoping to position themselves for a good holiday season, and that might be what saves them for this year. And they're pausing their quarterly cash dividend beyond the recently approved October payout. So if you're in this stock for a dividend, which some people might have been, that's probably why it sold down 30%, because investors do not like when you take their dividends away from them. I have sold out of companies like Intel and AT&T when they cut the dividends, and I will never go back to them because I no longer trust the management. So total sales decreased by 9.9% to 1.8 million, to $1,861 million. And if you take out the foreign exchange rate fluctuations, that's actually 10.2% drop. Same store sales, comparable sales, whatever you'd like to call it, down 9.4%. So things are not looking good. Gross profit down 460 basis points. They're doing a lot of markdowns, and again, they're talking about higher shrink, which we're seeing across a lot of the retail companies where there's a lot of theft going on. They lost $5 million in the second quarter, and for the quarter, they had a net loss of 5 cents per share. So they came in with some negative earnings. The company did not repurchase any shares during the period, nor do I expect them to. They've got other things that they need to be doing with that cash. So not buying back shares, as long as they're not issuing them, it's not a red flag, but it's definitely a yellow. Like we'd like to see them buying back shares, especially now that they're down 30%. But the reason that they're down is big enough that it's probably not a good idea in the long run. So here is their outlook. They changed their guidance quite a bit. It was originally for sales to be down from 6.5 to 8%. Now it's 8% on the low end, going up to 9%. Same store sales, 7.5 to 9, moved to 9 to 10. Square footage change, instead of going down 4%, they're just holding it steady. Licensing revenue bringing down $3 million. Gross margin, they lowered the bottom end of the range a little bit. Looks like they lowered everything 0.8%. Interest is going to be lower. Tax rate is going to be on the higher end. Yeah, earnings per share from 2 to 225, dropping down from 130 to 150, which is a huge drop. Last time we looked at this stock, we were expecting $2.03. So we were already on the lower end, but dropping that down to say 150 on the higher end is going to be a huge drop. That cuts down the earnings valuation by at least a quarter, which is already half the weighting of the stock. The market really trades with earnings on this one. So we'd be looking at this dropping down to like $15, definitely giving a huge hit to the valuation here. And then we continue down, we see the sales year over year down 10.7%, COGS down 4.9%. So they are having higher COGS and lower sales. I'm not saying that the COGS are rising year over year, but that profit is taking a hit because the COGS are only down 4.9% at the same time that the sales are down 10.7%. And we'd want to see them more in line. The total net income down 86.3% compared to last year. So definitely not looking very good here. Their assets are down 4.2%. Liabilities are down 7.8%. So they have done a pretty good job at paying down their debts, and that's why that interest payment is going to be lower. The shareholders' equity did raise a little bit because they're paying down liabilities faster than they're shrinking their assets. And so that's up 0.9%. So that's one good thing coming out of this. And their cash flows, they've been burning through cash. They're down to half of what they had at this point last year. And they spent 14.8%. Right? I mean, they at least spent 14.8% less than they did last year, but still, they cut their cash down from 582 to 225. I don't see anything good in here, and that's probably why the stock is selling down so much, because this is not a pretty earnings report. Not at all. Missing on sales, lowering guidance, cutting the dividend. They're freaking out right now because they're in a very rough spot. Could this be the opportunity to buy? Only if you believe in the company and the management. I said it was risky last time. I think it's incredibly risky now. If they're able to turn things around, will you likely make a profit? For sure. I mean, the stock is down so much. I'm still thinking that the balance sheet did worsen a little bit. Cash flows are pretty bad. But I don't think it was a sell down to the $16 level. So we're seeing a bit of a recovery today off people who are looking for that turnaround. The long-term investors jumped out because dividends gone, sales are dropping, but now you're getting some traders to come in and really pump up the stock. And it looks like it's on a bit of a run this morning, so it might have some momentum going into the start of the day. But that's what we're looking at for this one. But thank you guys for watching. Please like if you enjoyed the video. Comment what you think about the stock, and subscribe so you can stay up to date with everything else. And I'll catch you next time.